Max here again from Learn the Price Action. Today I'll be discussing with you a very interesting phenomena that happens over and over again in the market, and it's called pullbacks. And how do we trade pullbacks when we see some price action signal? And I'll be explaining to you using the chart I have in front of me. When I say pullback is that you see a price action signal, for example, a piercing pattern or a pin bar or a morning star or an evening star or a dark cloud or a hikake pattern. You know, these are the important price action signal patterns I typically trade. But how do you trade them? Okay, but when you see an engulfing pattern or when you see a dark cloud, how do you trade them? So I'll be going over a chart and I'll explain you how do you trade them exactly and how this is how professionals trade, and I'll show you example after example where people are sitting when they are waiting to trade. Okay, where do the professionals wait and watch, and then this is how they enter the market. Okay, they don't jump and move the market. The big banks, they move the market, but professionals, after that, they're like, whoa, okay, there is an activity, then they wait and watch. Then they wait for the retracements, that means the price to weaken, and then they get in the market. So I'll explain you how do you trade those. So I have in front of me US dollar, Singapore dollar chart, and I'm looking at a daily chart. So as you can see right here, the trend is kind of coming down. So and I'll explain you how I would have traded these trades, and then that's how you would trade as well. Okay, and if you want to learn price action, you're free to subscribe to my channel. But this is the philosophy I use for my trading methodology. This is an advanced trading method. By using this method, you will learn exactly how professionals trade. Okay, so I have, for example, I have this pattern which I'll draw in a minute for you. So I have this pattern right here. This is a typical morning star. Okay, so you have an upward movement, a small body, and then a downward movement. Okay, and then you see this pattern, you're like, oh man, I missed the opportunity. Where do I enter? Do I enter here, and I put my stop loss on top of this, or I should have entered here because I missed the opportunity? No, this is not how it works. So I'll explain you how do you enter the trade. So let's remove this for a second, and let's zoom in here for a second. Let's see the dynamics of this signal. Okay, so as you can see, the market is coming down, and you have this bulls pushing up. Then you have this small body, and then the bears they came down. Okay, now how do you trade it? Well, we'll wait for the pullback. Okay, but wait for the pullback where? Okay, and that's where the Fibonacci comes in. So what we'll do is we'll draw a Fibonacci of this signal entirely. So I'm going to take a Fibonacci retracement. So I'm going to take the high and I'm going to draw the low. So this is the pattern. So this is 1, candle 2, candle 3. So the high of these 3 candles this, and low of this 3 candles is this. Okay, so the bull, so see where it retraced? It retraced 50%. So when you see this pattern right here, okay, for example, like there is nothing, like for example, you don't have, let's say, I'm just gonna move it to the far screen corner. Okay, you see this pattern, okay, right here, and then where do you enter? So you draw the Fibonacci and you put your limit entry on the 50% right here. So you put your limit entry, and the next day the market came down, and the third day your order was filled, and fourth day what happened? Boom, look, market came down. Okay, and your stop loss would be obviously on top of this thing. So that's number one way. I'm going to go and show you another pattern and how do you trade that. Okay, let's look here. All right, so we have this pattern. We have it upside movement, and the market came down again. Okay, so like I said, this is a V formation. As you can see, it goes up and comes down. How do you trade it? How do you trade this V formation? Okay, so I'll explain you how to trade that. So by the way, this is moving up, and this is almost a dark cloud. This is almost like a engulfing pattern. This is a variation of a dark cloud, where the tail of this this bearish move is not on top of this body, but it's below it. But it's a type of dark cloud. Okay, this is typical. You see that in Forex where you have something like that. So how do you trade it? So you take the high and you take the low. By the way, this is a two pattern signal. So you take the high, you take the low. Okay, and I will draw the Fibonacci right here. You see right here. So you put your limit entry right here. So you had to wait how much? You had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You had to wait 2 weeks. But on the after the second week, your order was filled right here at the 50% level. And your stop loss would have been right here, and you would have achieved 3 times the reward. So if you risk, let's say, $500, you would have made at least $1,500 in the next couple of days. So that's one way. I'll show you another pattern here. And by the way, this happens over and over again in the market, and it's time and again it's happening. All right, right here, let's look at this pattern right here. So you have this inside bar and a false break and a move down. How do you trade this? This is a typical hikake pattern where you have an inside bar, market moves up and then comes down. How do you trade that? Okay, let's see how you trade that. So you see this hikake pattern, how do you trade it? You draw the top of the pattern, you draw the bottom of the pattern right here. Entry at the 50%. Look, if you would have put your entry here, after the hikake pattern on the fourth day, on the first day after the pattern, your order was filled and your stop loss would have been right here. So you would have had, let's say, your risk would be 40 pips and your reward was almost 167 pips. Wow, that's almost 4 times risk to reward. So that's called power of pullback. So when you see a pattern, you don't jump on the pattern. You wait, and you wait for the right opportunity, and then you enter the market. Okay, so, and I will show you another example using, let's say, I'm going to go to the weekly chart. I'm just going to show you because I love these weekly charts, and they can show a lot of information and how the things are happening. All right, look here. This is an interesting pattern. You have this body and a pin bar, and the market crashed down. Okay, first of all, this is a pin bar. Okay, so I will explain you how to trade the pin bar. This is another signal I teach in my system. But how do you trade a pin bar? So you have the pin bar. How do you trade it? Do you just enter the market? No, you wait for the retracement. How do you wait? You draw the high, you draw the low right here, 50%. That's right here. So you on the next week, your order was filled. So you put your entry right here, stop was right here, and then boom. So you have, let's say, 72 pips as a risk, and your reward is 21. 3 times risk to reward. Okay. So let's look at the same pattern in another way. So you have this body, price moves up, and the price falls back. Let's say you came in the market and you saw these 3 bars. You're like, man, I missed the opportunity. What do I do now? No, you do not. You have not still missed the opportunity. If you had missed the trade on the pin bar and this bar has already fallen, and then you saw the market lid, you still haven't lost the opportunity. Why? I'll explain you. What is this? This is another pattern. This is a morning star. Okay, what do you have? Right here, body, top of the morning star, and then crashing down. Let's draw the Fibonacci of this whole pattern instead of just the pin bar. So you have the top and you have the bottom right here. Look, where did the market came back to? It came back to 61.8 and it formed a beautiful pin bar. And bam, the market came down from here. That's how you trade. That's how these professionals trade. You don't, and they're trading with the trend. Okay. Yes, there are chances. There are times where you can trade counter trend too. And by the way, this appears to be a nice opportunity that's coming up. You have a pin bar, and the market wants to come back. And if you look here, if you look at this pattern, so you have 1, 2, and 3. So this is another pattern that's forming, and where what the high is right here, the low is right here. So we'll draw the Fibonacci of that right here. So if the last move was 61, I'm expecting that this move will be 61 too. So that means if the price wants to come back from here, it'll come back here and then come back again. So, and we will wait for an opportunity for the price to come back here, and then from here we'll look for another signal so the price can come back. Now we have a signal right here that happened 2 weeks back, and then actually I'm tempted to go long on this one. So if you put your entry right here, put your stop loss right here, your target could be at 50% or at 61.8% right here, and then that's your target. So your risk is approximately, let's say, 55 pips, and your reward is going to be at least 255 pips. That's your reward. It could take about 2 weeks, but it's a long-term hold. You make a lot of money in the long term, right? So that's the way. Second thing is that if you want, you can put your limit entry right here, because like I said, this is another pattern. You have this big move right here. You can put your entry right here. Just stop loss right here, and then wait for the market to write down. This is how the professionals trade. They put blind entries based on the patterns, and that's how the market is moving. Okay, I hope you guys understood the methodology. How do you trade these signals? And if you have any questions, feel free to subscribe to my channel, and I'll explain even more detail how do you trade these signals over and over again. Okay, and then I talk about my weekly reviews. If you have any questions, you can email me, then I'll be happy to answer this question. By the way, I'm looking at a few other signals right here. So I'm looking at a signal right here, which is pin bar right here. What happened to this pin bar? Let's see. Where it happened? 50% right here. See, it got this, your limit entry would have been filled here, and the market moved back up. Okay. Anyways, guys, I hope you guys like it, and if you have any questions, let me know. By the way, I don't trade these signals everywhere. I would not have traded this signal right here because it was still not at the high. But I would have traded this signal. But when you have to trade the opposite signals, you have to look at the relevant levels. Otherwise, the signal has to make sense. Otherwise, you can risk some of your money if your stop loss is not correct. And I highly recommend, as if you're a beginner trader, you should wait for the trend to happen and then go with the trend, and then take a signal with the trend instead of just taking the tops and trying to take the bottoms right here, because there's a lot of chop and sideways movements. I typically try to avoid them unless I see very clear signals, and if that happens, and then only I take the trade. Otherwise, I don't take the trade. Okay, guys. Anyways, happy trading and enjoy your trading career. Thank you. Thanks for watching.